Today, Robinhood cracks down on trading GameStop shares as the Reddit rebellion dominates discussion on Wall Street. Meanwhile, political strategists in Washington are paying attention to the amateur trading activity. They say it gives them deja vu to the rise of populism in the Republican Party. And finally, Apple reports a blowout quarter with record revenue as tensions heat up with Silicon Valley frenemy Facebook. I'm MacKenzie Sigalos, and this is CNBC After Hours. Stocks bounced back today. The Dow, S&P, and NASDAQ each finished in the green after a rough trading session yesterday when the three major averages all fell more than 2%. Meanwhile, the quote-unquote meme stocks turned over. These companies, pumped up by amateur traders on social platforms like Reddit with the expressed purpose of forcing certain hedge funds to lose money, well, they plummeted today as retail brokerages like Robinhood restricted trading of these volatile names. GameStop is the poster child of the retail-driven squeeze on the Wall Street short sellers. It got cut almost in half today after its fast and furious rise this month. Late this afternoon, after the market closed, Robinhood announced that it will allow limited trading of securities like GameStop and AMC tomorrow. But today's decision by the brokerages to impose restrictions drew criticism from the Reddit crowd and some lawmakers in Washington who questioned why professional traders can keep buying these shares, but the retail investors had their hands tied. Earlier today, CNBC's Kate Rooney broke down how the retail brokerages responded to the unprecedented trading action.
Just this morning, Robinhood, which is really seen as the brokerage firm of choice for a lot of those younger investors, said that in light of recent volatility, they're restricting transactions for certain securities to position close only. And to be clear, that means you can sell names like GameStop, but you can't buy them. The list includes GameStop, AMC, BlackBerry, Koss, and a few others. Robinhood also raised margin requirements for certain names, which essentially increases how much money investors need in their account if they're borrowing money to buy stocks. This is now becoming industry standard. We had Interactive Brokers pretty much say the same thing this morning. It's now liquidation only. Due to, quote, extraordinary volatility in the markets, any long positions also require 100% margin. It follows TD Ameritrade and Charles Schwab just yesterday, both of which restricted trading for GameStop and AMC in, quote, an abundance of caution. These moves are getting a lot of blowback on social media and the subreddit where excitement around GameStop really started, Wall Street Bets. Traders went after TD Ameritrade yesterday, calling it market manipulation. Robinhood is getting a lot of that same feedback this morning. Barstool Sports founder Dave Portnoy calling Robinhood, quote, the biggest fraud of them all. He says either Robinhood allows free trading or it's the end of Robinhood. Despite the blowback, the excitement around GameStop is generating some new interest in these mobile trading apps. According to data firm Apptopia, yesterday Robinhood had its single most downloads ever. It hit a record for highest daily active users at 2.6 million. And Robinhood ranked number 1 overall in the Apple App Store. Reddit, meanwhile, was number 2. TD Ameritrade, Webull, and E-Trade also saw their most daily active users ever. You've had a lot of people chime in on social media, and there is this sense of anger against what some traders are seeing more as the establishment. Yesterday, it was TD Ameritrade and Charles Schwab. Today, it's Robinhood, which has really been seen as a disruptor, as sort of on the side of these retail traders by democratizing finance. So it has set up this sort of tension between newer Wall Street traders who maybe are taking to Reddit or Twitter to talk about some of these trades and are bidding up GameStop. And then you have the brokerage firms who are trying to deal with volatility, try to stay compliant with their regulators, and it is just setting up this huge argument and tension all over social media.
Okay, let's get to our sound check. Here's a roundup of the day's biggest action and what the top newsmakers and business leaders had to say on CNBC's airwaves.
So we know the targets are the hedge funds, but we don't necessarily know who the players are on the other side. In other words, who are these traders in these chat rooms that are pushing out the shorts? If these individuals are just that, your Robinhood type traders, your individual retail traders, or if these are actually professionals.
The thing that has been really eye-opening for me is to see for how many people it's personal. Like I said, there are stories from the recession, but I do think this is a drastic shift.
As long as we're allowing companies to trade stocks in milliseconds, how can we expect this to be an investor's market? And until you change that, you can't change what's happening with Wall Street bets.
We are outperforming financially. We've got the strongest balance sheet, and our people are pumped. They've done a great job surviving 2020 and getting us to this point, and this is going to be a recovery year.
There's a vaccine out there, and as those vaccines get distributed and into arms, there will be a recovery. Again, none of us knows exactly when that'll happen, but certainly sometime in 2021.
All right, even though GameStop and other retail favorites like AMC and BlackBerry took significant hits today, the quote-unquote Reddit rebellion we've seen throughout the past week or so wasn't all about the money. There was always an element of trying to squeeze the hedge funds or stick it to the man. And that kind of populist groundswell is reminiscent of recent political movements, especially within the Republican Party. CNBC's Washington correspondent Eamon Javers says that his sources are watching the trading activity in GameStop, and they have a grave warning for the Wall Street establishment. This could be just the beginning.
Political Washington has been watching the action in GameStop this week with a mixture of fascination and familiarity. A lot of the folks here in D.C. say they recognize some of the patterns here of this populist movement from things that we've seen from the MAGA, Make America Great Again movement around Trump, and also from Occupy Wall Street. There's certain common themes to this populist groundswell. Let me run through a couple of the similarities that people are seeing. One is this sort of rage and economic anxiety, real frustration with what COVID and the economic collapse have done to people's lives, a belief that elites rig the system against the little guy and for themselves, use of new technologies in ways that democratize access to things that elites used to control and now have a broader swath of the public have access to. The memification of the message, the idea that a lot of these discussions can go viral and bring in a lot more people than they used to be able to bring in. An element of nostalgia for a better time is an interesting one. Remember, Make America Great Again was about maybe an imaginary vision, but a vision of the past of America that was better today and an effort to return to that. In the same sense, the GameStop stock itself, for a lot of these traders, is a return to their childhood, a fond memory of their youth. It's sort of a relief trade in this era of COVID and we're all locked in our houses. There's an idea here of a distrust of the media. The mainstream media doesn't understand us, is condescending to us. That's a common theme. And then a willing embrace of risk here. A lot of these traders know exactly what they're doing, know that this could end badly, and are willing to do it anyway and take on that risk in order to send a point. So what do the Washington political analysts say are the lessons learned from the populist movement in politics that might translate over to the populist movement we're now seeing in finance? Couple things to think about. One is that for the participants in this, the mixture of fun with a cause or a movement is a really potent thing. The idea that you could have fun while sticking it to the man, it's enjoyable, it's compelling, and it's going to bring in a lot of people. And that's why the pool is probably pretty unlimited here. Understand your critics. Know why there is this discontent and frustration with your industry and try to understand where it's coming from. And then finally, don't think this is someone else's fight. Some of the GOP politicians I talked to who were involved in the 2016 presidential campaign said, Jeb Bush thought this was Marco Rubio's problem in terms of the rise of populism in the Republican Party. It turned out none of those candidates addressed it. Donald Trump was able to harness that energy and take control of the party and remake it in the populist image. So some lessons learned here in Washington, maybe some of them applicable to Wall Street. The big difference, of course, is in this populist financial movement, there are financial losses here that are going to accrue to somebody. So it's going to end in tears in some way for someone, and that's probably going to change the trajectory of the emotion around this as well.
Okay, time for today's numbers round. We'll start with 50,000. Lowe's plans to hire more than 50,000 new workers in the U.S. ahead of its busy spring season. The home improvement company also announced that it will invest $80 million in its frontline associates in the form of discretionary bonuses. Full-time retail employees will receive $300, while part-time and seasonal retail workers will receive $150. Next, $111 billion. Apple delivered a monster earnings print last night when the company reported that it brought in a staggering $111 billion in revenue last quarter. It's the first time that Apple crossed the symbolic $100 billion mark in a single quarter. Overall sales rose 21% year over year, and the sales for each product category rose by double-digit percentage points as well. And finally, 14. Apple also showed up in Facebook's earnings. The social media giant beat expectations but warned that the privacy changes in Apple's iOS 14 may start to hurt its ability to target ads to iPhone users. Apple's new operating system requires app developers, like Facebook, to get opt-in permission from users in order to track their iPhone data, which is the same data that Facebook uses to allow advertisers to reach specific audiences with ads. Today, Apple CEO Tim Cook criticized Facebook's business model without naming the company specifically. Get all the details on the growing tension between Apple, Facebook, and their powerful CEOs by going to CNBC.com and downloading the CNBC app. That's it for After Hours. We'll be back here in our home office every Tuesday and Thursday, so be sure to catch us then.